All right, Colin, how are you doing today?
Good, Harry. How are you doing?
I think the dream team is back together. I think we've had a couple of vacations and a couple, maybe you even did an episode without me, but I'm back and I'm excited to chat with Sam today.
Yeah. Sam, good to have you.
Excited to be here.
All right. Well, we'll give you a bio, but this is your first podcast. I feel like we're extra special because we get to have you on for your first one.
I'm
Um,
excited about it. I'll try not to stumble too much.
no, just be yourself and it'll all be good. I'm sure Harry's got like a bunch of advice. He's the podcast guy now.
Well, if Sam's doing a
So,
bad job, I'll probably just start cutting in more and more and be like, all right, next topic, Sam, let's go. Move it along.
There we go. I
uh,
appreciate that.
Uh, all right. Well, Sam, let me introduce you to the fine folks that listen to Wannabe Angels. Sam is a seasoned professional in the startup and venture capital scene. He currently taking some time off to explore and actively invest, something I can relate with. But most recently, he built and ran the On Deck Angels program and was part of On Deck's fund team, where he also helped to develop the capital network strategy. So it sounds like you know what you're doing on the investing side. But also in the past, you co-founded Workstreamer, which is a B2B sales intelligence platform that got venture backing, but also sold to a PE firm in 2010. You also co-founded Heights Media, an ad tech platform providing liquidity to different ad exchange partners. And you've also been an EIR at Primary Ventures in New York and served as an operating partner at a family office with a portfolio of SaaS companies. So some cool things to dig into there. I don't think we've had an EIR yet. We've had a operating partner, I think, and a scout. So we may have to ask you about what an EIR actually does, other than
Sure.
a cool acronym. But also, so Sam, we met through I think a common investment for all three of us that Harry introduced me to, a company called Packsmith. But it sounds like you were earlier than us, so you were earlier to the game. Is that right? In meeting
A
Ben,
little
the
bit,
CEO.
yeah. So that kind of dates back to when I was at EIR for Primary Venture Partners. I got to know one of the co-founders, Simon. He was kind of transitioning out of Uber, and we had spent a bunch of time just talking through some ideas and incubation stuff. And he, was just one of these, folks who I find to be, super fascinating, a formidable, technical talent. And so we kind of kept in touch. And a little bit later, On Deck ended up starting a accelerator program called ODX, and maybe we'll touch on that later. But they were one of the first companies to enter into that program, and I kind of played a small role in helping them get in there and making a small investment alongside that.
Nice.
Very,
Yeah.
very cool.
Awesome. Well, Harry, you want to jump into some of the questions that
Yeah,
we
sure. Let's.
normally ask
Well,
our
I want to
angels?
start with your on deck experience, but before we get there, let's help the audience get to know you a little bit better on the angel investment side. So I've got a few of our standard rapid fire questions here. So number one, how many angel investments have you made?
I've done about 40 in total so far.
Wow, cool. And how many have you made this year, or do you plan to make?
Yeah, so I've done two so far, and probably something like 5 to 10 for the year.
Okay, cool. And what's your average check size?
Average check size is about 10K. I've done a little bit higher at times, but have tried to be pretty consistent around 10.
Cool. And the last one, what type of startups do you look for, and what stage?
Yeah, so my focus tends to be sort of pre-seed seed. I really enjoy being sort of first money into a round. Have a software focus, tend toward B2B, but definitely a little bit more driven by people. So, kind of as I was saying with Simon, kind of looking
Hmm.
for formidable founders, people with sort of an earned secret.
Yeah.
Half the team usually being technical. I love when you can really tell that the founder is obsessed with the customer and the problem. Look for signs of sort of market pull or some traction, some sign, even if it's really early, that there's some customers out there that are sort of
Yeah.
desperate for this solution. And then, I'd say I also tend to really look for kind of one exceptional thing that really stands out. And by exceptional, I mean, some aspect of maybe the founder or the team or the design that kind of puts that
Hmm.
particular deal in sort of like the top 10% of other deals that I've seen. I really find that helps me kind of get to a hell yeah
Yeah.
with my investments.
I like that. Hell yeah, that's a good response to any investment. So let's talk a little bit about your journey, Sam. Did you start angel investing and then go into the on deck and sort of build the on deck angel program, or how did that work timeline wise?
Yeah, I did. So, as you guys kind of covered earlier, I started as a founder,
Hmm.
had raised some venture money from Austin Ventures, who's not quite as active anymore, if at all. But had a kind of the ups and downs, right, of the entrepreneurial journey there,
Hmm.
and then ended up bootstrapping a company that I ran for 8 years in the tech space called Heights Media, and that really sort of afforded me the opportunity to sort of start investing. And so I was kind of the classic sort of operator investor.
Got it.
And then while I was doing the EIR role at Primary Ventures, Venture Partners, I was kind of helping them build out kind of more of a local New York angel scene. And kind of through that, got introduced to the folks at On Deck and ended up joining to build the On Deck Angel program, ODA.
Very cool. So how does the ODA program work, or what's the high level pitch?
Yeah, so the ODA program really was structured to be what we called sort of the community for the world's most helpful angel investors. And we were pretty intentional with the word helpful. So to me, if an angel is helpful, it means that they're not sort of the angel that's just looking to, maybe invest through an SPV and be pretty
Hmm.
passive, but somebody who really wants to be, in the trenches with the. And so most of the folks who were joining the ODA program were, sort of your classic operator angel, right? People who sort of lived and breathed startups already, had made a few investments, and were really looking to sort of build a track record, kind of hone the craft of angel investing, accelerate their pace of investing, right? And we really tried to provide sort of a platform for community education and deal flow. And so folks were, joining for a wide variety of reasons ultimately. But I think sort of the gap that we filled in the marketplace was really not being, focused on people going from 0 to 1 so much as people who had already done some investing, but, were
Hmm.
really sort of looking to, professionalize, so to speak.
So, in some sense, it was you guys were like kind of catalyzing deal flow for them, like more consistently, and then what?
Yeah, yeah.
Yeah.
So one of the things that we did, I think, really well was had a very active mastermind program. So I think when you're an angel, sometimes you can be doing it in a silo. But I think angel investing, really is the most fun when it's kind of social and done collaboratively. And so I think a lot of people were joining for that kind of collaborative nature of social due diligence, pure accountability, right, and just kind of collectively leveling each other up.
And did you?
Yeah.
So
Do
would you
you
guys just? Oh, sorry.
go for it, Colin?
I was gonna ask. So were you guys allowing people just to invest individually in companies, or in like were you syndicating a deal? Like how did that work?
Yeah. So yeah, great question. So the way that On Deck Angels worked, which is maybe a little bit different from your traditional angel group, was that everybody made investment decisions independently. Um, but there definitely was a lot of deal flow that would come through the On Deck network, right? On Deck, we can kind of talk about, but has been a few different things, but has always had sort of an accelerator component, a community component of founders, and so, yeah, there have been some really awesome, companies that have come up through there, and the On Deck Angel folks always got sort of an early look at those. Um, yeah, hopefully, does that answer the question? Or
Yeah. No, you got it.
okay.
Yeah. So what sort of you've obviously done a lot in building up this on deck angel program and done quite a bit yourself. What do you think like excites you the most, or what makes you so passionate about I guess not only the angel investing side but also the education and sort of fostering this community?
Yeah, there's a lot to unpack there. So, I'd say in general, one of the things that I've really come to believe is that angel investing is sort of a force for good. So, On Deck had this slogan that I really loved that was, startups save the world. And that's something I really believe. I think tech and innovation is really the way to solve a lot of the biggest challenges that we face. I've heard a few people say sort of like each investment is like a vote for the future that you want to see, right? And that really, resonates with me. I think, the support that angels give, whether it's, capital or encouragement, really allow founders who are the heroes, but really do enable these founders to kind of like take bigger swings and take more risk. So that's one thing. Another thing is that, I really came to learn that, I think angel investing provides a lot of people, myself included, with a sense of purpose. I think you get to play a small role, right, in helping these sort of like heroic founders tackle hard problems. But you can also, build your reputation, you build your
Mm-hmm.
track record. It's social, right? There's a huge like friendship component to it. It allows you to sort of pay things forward and sort of mentor the next generation of founders, and promotes kind of curiosity, right, and lifelong learning. So there's a lot to be passionate about there. On the education side, though, I think angel investing has changed a lot since I first started angel investing probably 7 years or so ago.
Hmm.
And I think education has become more important because of it. So I think overall angel investing has become much more accessible, but it's also become a real status symbol, right? And because of that, I think more people are interested in it, more people are doing it. Platforms like AngelList and crowdfunding, SPVs, right, have provided massive tailwinds that have really sort of unlocked access to a lot of, a lot more opportunity there. But I think success in venture is super hard without education and strategy.
Yeah.
I myself started kind of investing at, right? And I think that that's the way that a lot of angels kind of start. My first check was into a friend's company who I was kind of like squatting office space with in New York City. And I was lucky that that company and the next couple like ended up, having some momentum and doing well. But without a plan, I think most people just aren't positioned to be successful.
Yeah.
And so, yeah, happy to talk more about that.
Yeah, well, I think it's interesting you've been doing it for 7 years. You mentioned a couple of the biggest changes. It's easier. It definitely seems like it's more of a status symbol now. I mean, that was one of the reasons why I wanted to start this podcast, because everyone wants to be an angel. If you could sort of do it all over again, what would be one thing that you might do differently or change in your angel investing journey?
Yeah, I mean, it's a great question. I probably from the get-go would have tried to be more social in my approach to angel investing. So, On Deck used to talk a lot about the idea of sort of network driven investing.
Hmm.
And I know that's a phrase that gets kind of thrown out a lot
Yeah.
in the venture world, but I think it really is important. It's like I believe the Kauffman Foundation has done some really interesting research where, the quality of your network really determines a lot of your success in sort of venture and, as an angel. And so I think from the get-go, I would have really tried to be one, really develop my process a little bit more. I would have tried to be more rigorous about, maybe just writing a one-page memo and really trying to hold myself a little bit more accountable around the decision making.
Hmm.
And then two, try to be a little bit more social, and try to have more sort of, peer accountability and find friends to kind of debate ideas with and that sort of thing. But, even back 7 years ago, there just weren't nearly as many folks who were interested in angel investing as there are now. So for me, starting out, it was a little bit more of a solo thing.
Nice. I can relate on that. It feels like the more people I talk to and like get feedback on things, the sharper my like either conviction or lack thereof becomes with investing. And
Yeah.
I think what's funny is I think Harry and I trade back and forth a lot of things that we look at, and I think we have very different views on what's investable. And like you can view that as a negative, right? You can be like, "Oh, this person is not like it's a negative, right? Or like it's not good that they don't like it." Or you can kind of view them as your foil, like they're the opposite way of thinking about something. And I when I had that mindset shift to saying, okay, everyone is not either good or bad, like opinion on it or thoughts on it, but rather they're giving me a different way to think about the problem and why it would maybe be successful or not. It really helped me to become more like confident in investing. And I do feel like that's like part of the network is not just deal flow, but it's also how do you leverage it to learn? I don't know. Is that something you've experienced?
Yeah, no, I think that's exactly right. I've heard, much better, more successful venture investors than myself say that, some of the best deals were definitely non-consensus, right, in partner meetings. And I think it's really helpful to have somebody, who's got a different perspective on a particular deal and kind of challenges you a little bit, right? I think that's where you really grow as an investor, being able to sort of articulate, why you believe in that upside, or you kind of see some possibility where somebody else thinks the probability is not high, or something like that. So yeah, I think that kind of like first principles thinking is super important.
Yeah, the I have one question, but one more thought on that was that I was talking to a VC yesterday, and they were interested in some of the early stage marketplace deals I see, and I was kind of telling them some of the ones I invested in, but that other name investors had passed on, and I was starting to feel a little bit like, oh, maybe like that doesn't look good on me. But I was like, but I actually really believe in what these companies are doing, and I've dug in with their numbers, and it was just like one interesting moment where I was like, I don't know that you have conviction or you don't, and right, just because someone else doesn't do something doesn't necessarily mean it's right or wrong. Anyway, so
Yeah.
I've been chewing on that for a minute. So questions for you. So EIR, I think it stands for Entrepreneur in Residence.
It does.
What does that entail? Like, does that like a dream job for a former founder? Is like what? How does it play in the venture world?
Yeah, I think the reality is that it's very different depending on where you are. But usually means that you're probably being compensated. You're generally sitting with at the fund, helping them sort of like look at deal flow. So often there's like kind of a sourcing component. Often an EIR will have some area of expertise or some vertical that they know really well and that the fund's interested in. And ultimately, I think the goal for most EIRs is to start a business that kind of gets incubated at the fund, and that could look a lot of different ways, right? Some funds kind of run more of a traditional accelerator program. Others might just want kind of like the right for first investment, something like that. But usually it's kind of a bit of a dual role where I think the person is both focused on trying to start a new company, and the venture fund ideally is kind of playing a role in helping shepherd that. But at the end of the day, anyone, I'm sure all I think we've all been founders, right? There's only so much an external party can really do to help you on that journey. And then usually you're also doing some sourcing or some other work, kind of sometimes also working as maybe an operating partner, helping with recruitment or talent or something like that.
Yeah. So you've had a few different roles on the investment side, as an EIR, as a founder, even, and,
Mm-hmm.
supporting angels and educating them. And now sounds like transitioning more into actual, sort of full time, or at least your main focus being angel investing. What have you enjoyed the most and why? If you had to pick one, put you on the spot.
Yeah, I mean, one of the things I loved about the role at On Deck and some of the other roles that I've had is that kind of straddle the line of both operating and investing.
Yeah.
So it's kind of hard to pick one, right? But I think at different points in your life, different roles are kind of a better situation for one reason or another. And more recently, I think I've tried to spend some time kind of thinking through new ideas to start and that sort of thing. And for whatever reason, I just don't think I'm in that mindset at the moment. But one of the things that I like to say is an angel investor, one of the other side benefits, right, is you get to be sort of like a shadow co-founder
Yeah.
of other companies. And again, I'm the type of person who when I make an investment, I really like to get to know the founder. I like to be involved, and just in some small way feel like part of that person's journey. So I feel like through investing, I'm still being able to kind of participate in some of the fun of operating as well.
Yeah, and I think for me, I know one of the things I like most about angel investing is that you don't have to make it your full time. You don't even have to really spend a lot of time in some ways. Like a lot of the deals that I actually do, I don't really take a cold pitch. It's like, oh, I meet them at this event for my other part of my business, or kind of doing some other deal. And I sort of like to think about it like high leverage in that way. And obviously, we've had a lot of founder, operator, investor types on, and so it seems to be kind of one of the benefits there. So I think that's definitely kind of cool and makes it fun, right?
Yeah, absolutely. I mean, one of the things about angel investing that I think is great is that there are a lot of different ways to win, and kind of comes
Hmm.
back to a point that I used to make a lot to folks at on deck, which is that you know you there are structural issues in the venture space, right? And if you're coming at something from purely sort of a ego driven thing, like you're looking for the status, or you're just looking at financial returns, then the outcomes are pretty binary, and it's pretty hard, I think, Andy Duke, the famous poker player and author, talks a lot about this concept of base rates, which are sort of these like unbiased probabilities. And the base rate in angel investing is that most people are probably going to lose money. And so I think really getting down to sort of your motivations and kind of like reasons why you want to invest, can be really helpful because there really are many ways to win. Outside of just financial returns, right? You get to build a lot of relationships. You can sort of create career optionality for yourself as you build a track record. You build your reputation with founders, right? Build a great network. So, I think about, if you can step back and sort of at the, kind of early on, start to think about those motivations, I find that, those are often the angels who actually end up having the most success, kind of the like score takes care of itself type thing.
So some questions on your angel investing strategy, given that you educated a bunch of people on it. One of the common threads that we hear through many of our interviews is that, people, if they would go back, they would change essentially their bet sizing. They would probably do smaller checks up front and they would do less lumpy, less big ones. It's almost universal. Like the first check was like too big for a lot of people. What,
Yep.
How do you think about that? What did you guys teach people? Tell us a little bit more about that.
Yeah. So, I think there are a lot of different ways to sort of skin a cat, right? And there's no one right approach to angel investing. So I wouldn't say that the education aspect of what we did was necessarily about here is the right way to, approach evaluating. We tended to, share lots of different frameworks or approaches that might be better for some people, might be worse for others. And one of the things I liked to talk a lot about was the idea of portfolio construction for angels. So it gets talked a lot about, for VCs, but less often in angel investing. But obviously, I think the more shots on goal you have to hit an outlier is important, right? And so, again, this goes back to the idea of implementing process and strategy early on. And education is a key part of that. But yeah, the more diversified your portfolio is, the higher your likelihood for success. So I think that was one of the key sort of like insights. Not revolutionary, but super important, I think, for a lot of angels to understand. And then also just the importance that your overall goal, I think, ultimately is to sort of be sought after by founders. And so that means you really need to kind of build what I called a platform, right? You need to think about, your own brand, your value add. And ultimately, I think when people are getting into angel investing, one of the more non-obvious things, I guess, is the role of like adverse selection, right? It's, angels aren't always seeing the best deals. And so how do you see the best deals? Well, you've got to kind of, get positioned as best as you can, right? And that means like improving, your network quality, improving your access, improving your platform, being differentiated in the market, right? All these, kind of things. So I would say that was really more of the sort of educational angle that we sort of took to, teaching angel investing as opposed to like any one specific framework.
Got it. That makes sense. Did you guys like pitch like going into like specific area of expertise? Harry always talks about being the guy for something. And is that something
Yeah.
that you've experienced through your career? Like, are you a guy for something? Like, are you the on deck angel guy, or what?
Yeah, I'd say if anything, I think I've tried to brand myself a little bit around sort of my angel network and connections. Definitely a lot of my deal flow comes from other investors as well as founders. And I think one of the things that I bring to the table for founders is that, really large network, and largely a network of folks who have been former founders, operators, right? So, if a founder comes to me looking for expertise in some area or some sort of like technical help, and have the network to be able to quickly triangulate and get them a conversation with the right person. But yeah, I'd say my own investing is fairly generalist, although, kind of skews toward, sort of B2B, so do a lot of like fintech marketplaces, dev tools. But yeah, I wouldn't say that I'm, specifically the guy for any one thing. But I think if you can do that and it's like true to your brand, then it's a great place to be because you can become very well known, especially if you're good on social media or that sort of thing. It's a very easy way to sort of stand out and be branded.
Yeah, very cool. Well, I guess speaking of social media, we've got a section here where we call trending Twitter threads, and we want to get your take. I was
All
looking.
right,
I don't
love
know
it.
how active you are on Twitter, Sam, but there's a lot going on in the investor community these days, as you might imagine. So we're going to get your hot take if that sounds good.
Let's do it.
All right. Now, Colin hasn't even seen these tweets for today. So I picked them. So I'm going to share it on screen right now for those who are watching live. And then we'll go ahead and read them off too. So hopefully this will load up here in a second. But this first tweet is from Villy. He's a venture capitalist at Two Sigma VC. He says, I just saw the cap table of a good seed startup, and the incubation studio owns about 45% of the common, while the founders own 28% before safes, which makes me think how broken is the incubation model. Yes, it works once every 10 years, but this is not a good way to build startups. So Sam, what do you think? I know On Deck, I think they've got an accelerator, which is a little different from incubator, but what do you think about these alternative models out there?
Yeah, it's a good hot take. Yeah, I think there are a lot of I don't know what specific incubator he's referring to, but I do think some are borderline predatory. But
Mm,
at the same time, I do think that a lot of incubators do add a ton of value that's not the same as what say an accelerator is bringing to the table, which is typically some expertise. But
hmm
a lot of times these incubators are actually providing the team or building a lot of the product. So kind of a case by case basis, but yeah, that's a good take.
Do you
Is do
recommend
you,
that founders go a certain path, whether it's, like incubator or studio or accelerator, or, just kind of try to raise money on your own? Or how do you think about like the different paths for founders?
Yeah, I mean, I think a lot of it is kind of dependent on the person, right? I mean, I think
Hmm
if you're somebody who's a little bit more on deck we used to use the word legible quite a bit, but if you're somebody who's got a network, has got some real skills and can build a prototype and get some early traction, then I think almost always you're probably better served just going to angels and kind of taking a more traditional path. um, I do think accelerators can be super helpful for first time founders, in folks who kind of like lack that network or lack that sort of 101
Yeah.
in a lot of the kind of classic entrepreneur educational categories. So I think those can be great. And then incubators, I'm a little bit less familiar with. But for the right person, right, who's looking to go into a situation where they can be entrepreneurial, plus maybe have a salary, because a lot of these incubators are also paying kind of like a market rate or close to market rate salary, then yeah, I don't know, for them that might be the right decision, but it's usually not the type of founder opportunity that I'm interested in personally.
yeah, I think I have some hot takes here as well. I think part of it is, there's the predatory part, right? Which I actually don't view as much of a problem because if these, if there is the value add such that it's worth that amount of the equity, I see no issue with that, right? If there's money and capital, like human capital put into it, then yeah, maybe that is worth that percentage. I don't know what that number is, but it's worth
Yeah.
something. But the thing that I struggle with accelerators, incubators, studios, just generally, which I haven't parsed myself to get the full thought, is the adverse selection piece of it. Like the
Mm-hmm.
people that end up selecting to go to these things, like may have the potential when they're trained up, right? But they also are kind of self saying, I don't know what I don't know enough to do what I want to do. And I think that's the thing that concerns me is they may have conviction and passion and all those things, but they may not have the wherewithal. That being said, I've kind of I've worked with a bunch of people that have done both, and I've seen success on all different flavors. And I
Yeah.
don't think it's I can't pass judgment on it. I think you just have to look case by case basis. Um, I think Mike Wilner, who we both know, they've done you know what they've done their venture studio, which I think is just a bunch of great smart people together building ideas, which makes a lot of sense to me. Like that, I am like,
Mm-hmm.
of course, like yeah, like why don't we get all the gang back together that knows how to do this really well and do more ideas than other people can do? That makes a lot of sense to me. And then in that case, the venture studio owns a big chunk of the company. That makes sense because like that makes sense. So
Yep.
I don't know. It's just baby out the bathwater a bit in my feeling with some of these takes.
Yeah, I agree with you. I think that one other point though on the accelerators is that, as a positive, I do think they've kind of, democratized access to
Mm,
venture a little bit, right? I think there are a lot of international founders, who probably would have been just passed over by most, US angel investors or VCs that have been able to get a start in some of these accelerator programs, right? And kind of talent's everywhere these days, right? But I
Yeah.
think like capital is not necessarily. So I think they've played a good role for the
Yeah.
ecosystem from that lens.
Definitely. Yeah, it is cool to see how many different paths there are and obviously even, all the different roles. And, we talked about the status symbol for an angel investor. And so this next tweet, I think, kind of lines up with that. And so I'll share it here on the screen and read it. It's from Matt Turk, who's a VC at First Mark Cap. And this was a big, this tweet got a lot of action this week. So it'll pop up on the screen here. And it's about, kind of more broadly VC and status symbol. But he says, real talk about VC lifestyle for a second. Number one, 100 to 200 people in the industry make the big bucks, $4 signs, $5 signs, and have that Aspen St. Tropez lifestyle on Instagram. Number two, though, bucket, thousands of people make the same amounts of cash they would working at, say, a bank. It's probably a pretty good salary. And then bucket number three for VC lifestyle is maybe 10,000 question mark, broad swaths, make much less, small funds, solo GP, juniors, CVC. I don't even know what a CVC is, but that type of a lower role, I guess.
Yeah,
So what do you think,
corporate venture.
Sam?
Yeah.
What corporate venture? There we go. What do you think?
Yeah, I mean, look, I tend to agree with him. I haven't been a full-time VC, but I think in some ways it's a relatively, privileged role. But,
Hmm.
at On Deck Angels, right, I spent a lot of time working with emerging managers in our group who were kind of raising solo funds,
Yeah.
small funds, and the struggle's real there. I mean, these are people who generally are doing this out of a real sense of passion, and sort of like love of the game of being involved with early stage companies. So yeah, I mean, that point number three definitely resonates. I think there are a lot of people who are not making a lot doing it, um, but just love it.
What do you think is the motivation that you see most people getting into angel investing? Because, and even, investing more broadly, I actually don't feel like many people get into it because they're like, oh, this is a great way to make money or I'm going to get rich off of this. I think most people are pretty realistic. Like they understand, hey, angel investing, you're probably going to lose money. What motivations do you see and what do you kind of recommend, like why people get into this?
Yeah, I think there are a combination of reasons, right? I mean, I do think actually there are a fair number of people who get interested in it from the aspect of the potential for asymmetric returns, right? It's like you
Hmm.
you read about folks in early on in Uber who invested $5,000 and turned it into 25 million or whatnot. But most of the angels that I know, are these sort of classic operator angels. People who have been in the startup space for a long time. They're sort of comfortable in that sort of environment, investing
Hmm.
in that those types of riskier opportunities. And a lot of it, kind of harkens back to what I was saying earlier, where, I think there's an element for a lot of people about, it's sort of sparking a curiosity, kind of like lifelong learning, getting
Yeah.
to kind of have a sense of purpose, in deriving, some joy just from being able to support these people who are, out there trying to change the world. Well, maybe you're, in an engineering role at Google, which, is just it's just a different thing, right? So I think like most of the great investors that I've seen, most of my friends, I agree with you. I think are getting into angel investing more for sort of like the right reasons. And again, a lot
Hmm.
of people start ad hoc, right? It might just be supporting a friend. But I think yeah, I'll kind of stop there. But yeah, I agree with you.
Yeah, I think there's a sense now that like getting into VC is kind of what investment banking was like in the 2000, early 2000s. So I feel like people coming out of Ivy League schools, they're vying for those positions. So I think that's part of like what the sentiment is about is like, is it really as great as you think it is, right? Or is it just the few figureheads on Twitter living it up that make it seem better than it is? But the solo GP
Yeah.
life, I mean, just having looked at, just the economics, right? Is that your first fund is, I mean, that's ramen salaries for that, right? And but I think it's all about getting your track record right, and it's the second, third
Hmm.
fund. I think that's the consensus, and I think a lot of the comments there were like, well, yeah, you start making money once you one realize some carry, but two also raise larger funds, usually in your second and third. Um,
Yeah.
so
Yeah, but it's kind of like power laws within power laws, right? I mean, a lot of these small, solo GPs end up raising a first fund and then don't, or, my guess is will not end up raising a second or third. And so you kind of hear about the people who are able to scale up the funds, but I don't think that's, always the case.
Yeah, very cool. Well, Sam, we really appreciate you coming on. If folks want to learn a little bit more about what you're up to, where should they follow you on social? How should they reach out? And if you want to give a quick a website or anything for On Deck Angels too, we can share all those links in the show notes.
Yeah, so I can be reached. I am on Twitter, more of a lurker, but Sam, my last name Huleatt, on Twitter, and then I have a personal website that's samhuleatt.com, and I've actually
Cool.
got quite a bit of content there related to angel topics and that
Oh,
sort of thing.
awesome. Cool. Well, we'll link up to those in the show notes and appreciate you coming on, Sam. Take care.
Yeah, this was great. Appreciate everything you guys are doing for the ecosystem.